Kasbah board is recommending that shareholders vote for all resolutions at the AGM, including Resolution 8 to approve the Parla convertible loan. The convertible loan will provide Kasbah with up to $1 million worth of additional funding while it works to finalise the financing of the Ashmash Tin project, and will defer repayment of existing debt to December 2019 or, at Kasbah's election, to December 2020. The company has endeavoured to identify alternative means of sourcing the necessary funds, but has been unable to secure any commercially acceptable alternatives. The board therefore recommends that shareholders vote for Resolution 8 at the upcoming AGM. Kasbah has an existing $4 million debt to Parla, which is repayable in full in March 2019. Parla is a Swiss-based private equity fund and is the largest shareholder of Kasbah, with 21% of the issued shares. It's been a big supporter of Kasbah over the last 2 years, providing over $8 million worth of funds in both debt and equity, allowing the company to significantly advance its Ashmash Tin project in Morocco. The convertible loan extends the March 2019 repayment date for the existing debt to December 2019, or at Kasbah's election to December 2020. The loan also provides Kasbah with up to $1 million worth of additional funding to continue progressing development of the Ashmash Tin project. If shareholders approve the convertible loan, it will have a principal amount of $5 million, providing an additional $1 million worth of funds in the form of cash to Kasbah. Kasbah can elect how much of this it draws down. The convertible loan will be drawn to at least $4 million to cover the existing debt that Kasbah has with Parla, and will carry a 12% coupon rate or interest rate. The convertible loan is always subject to Parla's conversion rights at 1.2 cents per share. The conversion price represents a 50% premium to the closing price prior to announcing the loan, and a 33% premium to the closing price on the 29th of November. If Parla converted immediately after shareholder approval, it would then have a 44% interest in the company prior to any further capital raise. However, the board and Parla has stated in the notice of meeting that it has no present intention to convert, and if not converted, Parla's ownership would remain at 21%. If the convertible loan is extended until December 2020, Parla could have a maximum interest of 48.9% if the maximum amount is drawn, assuming that no other Kasbah shares have been issued. Recognising that the company needs to remain solvent and that it has a March 2019 repayment date for the existing $4 million debt, any alternative proposal would have to be sized such that at around $5 million worth of funding was immediately available. This could come in the form of an underwritten equity raise, a series of placements, or a loan from another third party. As we sit here today, there is no alternative proposal that comes with certainty of funding, and as such, the board of Kasbah recommends that shareholders vote for Resolution 8. Given the value of the Ashmash project, it could be argued that Parla is able to convert its loan at a favourable price. However, the last time Kasbah stock traded at above 1.2 cents was in August 2018, and the conversion price of 1.2 cents per share represents a 33% premium to the share price on the 29th of November. The independent expert has produced a valuation of the company based on a change of control, which concluded that the value of 100% of the Kasbah Resources shares is much higher than the Kasbah's current share price and higher than the 1.2 cents per share being offered by Parler, and as such, the independent expert conclusion was that the transaction is not fair. However, the independent expert considers a range of other factors in its report and recognises that the company needs to remain solvent. Kasbah has an impending debt due in March, and there have been no viable or superior offers put forward that provide certainty of funding. And as a result, the independent expert has concluded that the deal is reasonable. In recommending the Parler convertible loan, the Kasbah board wanted to ensure that existing shareholders had the opportunity to purchase shares in the company at a price less than that offered to Parler, at 1.1 cents per share, to allow other shareholders the opportunity to increase their investment in the company, which may not otherwise be available. Shareholders can purchase up to $15,000 worth of shares, or up to 1.36 million shares. The company has available placement capacity, and the company remains open to proposals for additional funding from appropriately qualified persons and would be pleased to speak to anyone if they contact the company directly. The board is encouraging its shareholders to take part in the SPP, and once the quantum of funds raised is understood, will consider paying down part of the Parler loan. The board is recommending to shareholders that they vote in favour of all resolutions at the upcoming AGM, including Resolution 8, to approve the Parler convertible loan, which will provide immediate funding of up to $1 million and defer repayment of the existing $4 million debt, which is otherwise payable in March 2019. This recommendation is made in the absence of any superior funding alternatives that provide certainty of funding.